Dear viewers, a few days ago, Railways witnessed a worrisome event. A cylinder was found laid on the railway track in Kanpur. Thankfully, the emergency brakes were hit hard, causing the train to come to a screeching halt. A major accident was averted. But the problem does not end there. As per the news, the police spotted petrol bottle, matchboxes, and a bag with gunpowder-like substance at the site. What's more, it's not a standalone incident. This year, over a dozen such potential hazards have been reported. Post-COVID, the increased budget allocation to railway sector has led to a smooth run in the stocks of this sector. But a few accidents could derail this story. As such, the investment needs to be done not just in laying tracks and new trains, but also in the railway safety system. After all, it's not just capital, but human lives at risk. To be fair, we have come a long way. In 2017-18, rupees 1 trillion were allocated to railway safety. By 2022, rupees 1.08 trillion was used. From 473 in 2001, the train accidents have come down to 48 in 2023, but we have to target for zero. As they say, a chain is only as strong as its weakest link. This requires investment in vigilance systems, elimination of human errors, in safety at level crossing gates, complete track circuiting, in better visibility, in poor weather signaling infrastructure, bridge and track inspections and repairs, and so on. An accident-free railway system needs automation, and Kavach could be the solution. Kavach is an indigenously developed automated train protection system. It has been tested and found effective in Vande Bharat trains. Apparently, it is also the most cost-effective system globally. Started in pilot mode in 2016, Kavach was adopted as a nationwide system in 2020. And as I record this, Kavach-related work is going on fast track, covering over 3,000 route kilometers. And this is just the start. Over the next 5 years, the target is to cover over 35,000 kilometers. So let's come to the part you must be waiting for, the listed companies that can benefit from these targets. The first is HBL Power Systems. HBL Power prides itself on plugging technology gaps, especially in niche and scalable markets, which are too small for big companies and too difficult to crack for small companies. Apart from railways, HBL caters to oil and gas, EVs, defense, energy, storage systems, and data centers. Its export markets span across 50 countries. The management's philosophy is to avoid capital-intensive businesses and to lead by engineering powered with in-house R&D. Lead and lithium batteries, electric drive trains, defense electronics, and in railways, electronic rail signaling, Kavach, electronic interlock, train management systems, and centralized train control systems are its area of focus. It aims to be number one or number two in the areas it is present in, and in most of its verticals, it is already claiming that spot. While Kavach became a commercial business in 2022, the company had started working on train safety systems in 2007. As Kavach tenders are rolled out, with a capex of rupees 1 billion this year, the company is expecting 30% growth in FY26 and 20% growth thereafter until FY28. The company expects to maintain EBITDA margins that stand at 20% for the last 12 months. FY25, however, is likely to be flat on a high base of FY24. With negligible debt to equity, the company has posted return on capital employed of 34%. Its financials reflect sharp improvement in working capital management. The stock's PE looks high at 52 times. However, in last 12 months, its profit has grown at 137%, leading to a benign price to earnings growth of 0.4. Now, this discussion would not be complete without flagging off the potential risks. These include execution and ordering activity, stretched operating cycle which is inherent in the business, and payoff on investments that it has made in associate entities to strengthen its tech offerings. But all in all, I believe it's a good stock to have in your watch list. The second stock is Karnix Microsystems India Limited with a market cap of 14 billion rupees. The sectors it caters to include railway safety systems, telecom, defense, water management solutions, and embedded or IoT or Internet of Things products and turnkey project execution. With its losses, negative return ratios, and elongated working capital cycle, the company does not make the cut on financial screeners for quality stocks. But it caught my attention for two reasons. First, in the month of August 2024, the insiders have bought the stock from the open market at Rs 874. Second, in its latest quarter results, the company's performance has turned around. Connex expects Kavach-based business to go up 10x from 1.2 billion in FY24 to rupees 12 billion in FY27. Time will tell if there is a successful turnaround story here, but this is another stock to monitor for Kavach theme. The third stock that deserves a mention here is an SME company, Concord Control Systems Limited, with a market cap of rupees 11 billion. Its main business is traction and coaching products, that is battery chargers, lights, fans, couplers, controls, and distribution panel, etc. And it is focusing on making advanced communication products which are used in the locomotives operations. Concord invests in research-based companies, and post-acquisition, it plugs them to its own railway ecosystem. It has 26% stake in Progota India, which deals in Kavach projects. Its order book has swelled from rupees 37 billion to rupees 197 billion in just 1 year. Operating profit margin in the same period are up from 16% to 26%. The balance sheet has low debt. The return on equity is 28%. The management is targeting 40 to 50% revenue CAGR in the next 3 years to 5 years, with operating profit margin in the range of 23% to 25%. Now, other stocks under this theme include Railtel and KEC International. For the longer list, click the link below the video. Now, do note that each of these companies and stocks comes with its own set of risks. The discussion here does not imply any view on any of the stocks. Viewers are expected to do their due diligence before taking investment decisions. Nonetheless, the Kavach opportunity is big, and it would be good to add these names to your watch list. With that disclaimer, I have come to the end of the video. Let me know through your likes if you found it useful. Share your feedback in the comments section. For more such updates on small caps participating in big themes, subscribe to Equitymaster YouTube channel. Thank you for watching. Goodbye.